Hi, I'm Rick Van Wieren from Remax Properties, and welcome to Rick on Real Estate. And today we're going to be talking about the basics of the mortgage lending process. And with me is my special guest, Debbie Havens from Academy Mortgage. Debbie, thanks for joining us.
You're welcome. Hi.
So one of the things that I run into with my buyers sometimes is they don't understand all the different steps that go on in a mortgage process.
Sure.
And they think that when they've met with a mortgage originator that it's all done. And it can't be farther from the truth, right?
Correct.
How does that all work?
Yeah, good question. It's never really done till the buyer has keys and the seller has money.
There you go.
And then that's just the way that goes. So the first step in the process is speaking with a realtor and or a lender, sometimes at the same time,
right,
and seeing what the goals are of the client. How much do they want to qualify for? Where do they want their payment? So
and
that's...
this lender person they're talking to is the originator, right?
The originator. Hopefully, most of the time. Sometimes they're with a lot of your online companies, and maybe
so we're not going to talk about online companies.
Okay, good. So local lender, you're going to be sitting with a licensed
reputable
originator. Yes, yes. And they're the ones who originate the process to purchase the home, to get the money in line to purchase the home.
Great.
So the first step is pre-qualifying. How much do you make? What is your income? We always send out a checklist, so when they come in, they have the documents.
Right.
So we can do a pre-qual in 5 minutes and a pre-approval in less than an hour.
Nice.
Sometimes 30 minutes, 10 minutes, depending on how quick and the process is for the documents. So the first step is pre-qualification. Then once we submit for a pre-approval, they usually will go under contract. Then the contract comes in, and then the file goes to what's called setup.
Okay.
So it goes to a setup person, and then that setup person puts everything together, makes sure all the I's are dotted, all the T's are crossed, everything's in there, all the documents are in there.
Is that sometimes called the processor too?
No, the setup before it goes to the processor.
Oh, okay.
So that way when the processor gets it, and this is a very timely, quick process.
Yeah. Okay.
So from pre-qual, pre-approval, setup, processing, that could be 24 to 48 hours.
Okay.
And then, so it goes pre-qualification, setup, processing. So after processing, the file then goes to the underwriter, and everything is electronic. So everything's being sent electronic, and it's all secure. So the underwriter sometimes, unfortunately, has the nickname, or, people refer to them as the undertaker, and that is not the case. Anytime an underwriter, what they're doing when they receive the file, they're ensuring that that loan meets the guidelines for the investor, and that buyer's not going to default to the best of their knowledge.
Sure.
Sometimes things happen.
And they're really getting into the fine detail of the application.
Yes.
Point, right?
Yes. And sometimes the underwriter will ask for a condition. Okay. And that's where the misnomer comes in for loan officers to go, oh, the underwriter, 99.9% of the time, if there's a closing issue or a problem to get to closing, it was the loan officer's fault. They missed something. I'm very hard on loan officers, and I am one, and I hold our loan officers very accountable that if they missed it, it's not the underwriter's fault.
Okay.
So we try and make sure.
Underwriters under the bus?
No, never, because they're really phenomenal.
Yeah, and we love you underwriters, just so you know, because we know that the loan doesn't close if you don't say yes. So,
right. And they love saying yes. Lenders should not be taking a loan and throwing it against the wall to see if it sticks.
Yeah, no, exactly.
They know the guidelines. They know what they need. So to tell a buyer, oh, you had a divorce, it's not going to come up, don't worry about it.
It's going to come up.
I always will ask the clients, this may come up, it may not.
Right.
We'd rather have it and not need it than need it and not have it.
Yeah.
And then underwriting, they do all their stuff, which is great, approve the file.
Yep.
And then you're going to move into the closing section of the loan. So we send numbers to our closer, then our closer sends the numbers to the title company, and then those two work together to get what's called the closing disclosure out. And there's a 3-day rule. The buyer has to acknowledge that at least 3 days before closing.
And that's a signature.
It's an electronic signature or a written signature. Yes, it's not just a, yep, I got it.
Yeah.
Nope. And then after closing at the title company, the lender will have had money there. So you want to make sure that you're working with a lender who can fund and guarantee that they have money at the table.
That's a huge problem when we work with out-of-state 800 number lenders sometimes. And I appreciate you go to enough closings and you kind of get the buzz from the title companies. And there's lenders they really like seeing at the title company. And Academy's one of them.
Yeah.
Because they always know the money's going to be there.
Absolutely. Closing
important.
on time every every time, and we guarantee that we will have money at the closing table
Nice.
for the borrower.
Nice.
So then the loan closes, and then it funds. So the buyer receives their keys, the seller receives the proceeds from their sale, and then after that, there's one more step, and that's post-closing. So now the file comes back to our closer, making sure that the title closer and we get all the documents signed and dated, all that fun stuff notarized. Then that file is delivered and shipped to the investor. And sometimes the investor might come back and go, oh, there was a box not marked. Not often.
Shouldn't happen.
Nope.
Just so you know, I don't hear about too many of those. It's a rare thing for sure.
Yeah, but
And
it
then
could. That's
obviously-
post-closing.
And then obviously the money starts going the other way, where the buyer starts writing
That's
checks every
exciting.
month.
Now they're working on obtaining, and they're already have attained home ownership, and they're in their home and they're paying their mortgage.
Yeah, nice. Well, Debbie, thanks so much for enlightening us
welcome.
on all those steps, and hopefully that was helpful to you. If you're a first-time home buyer especially, we find that this kind of information can be very helpful. Thanks for joining us on Rick on Real Estate.